Welcome, everyone. Let's dive right into this explainer because today we are tackling something huge, the future of money. We're going to trace this incredibly fascinating journey from the physical cash that has literally ruled our pockets for centuries all the way to the digital frontier that's completely upending how we even think about value. We're pulling all of this directly from some deeply insightful source material on financial history and tech, breaking it down so we can see exactly where we're headed.
Section 1. The End of Cash. A Cashless Future.
Okay, so check out this startling prediction from May 2018. Cecilia Skingsley, the deputy governor of Sweden's central bank, came out and said, if you extrapolate current trends, the last note will have been handed back to the Riksbank by 2030. Stop and think about that for a second. We're talking about an entire nation where, in just a few short years, using paper currency for commercial transactions could just completely cease to exist.
And there's a brilliant bit of historical irony here. Back in 1668, Sweden established the Riksbank. That was the world's very first central bank, and they were among the first to ever issue paper banknotes. Yet, by 2030, they're on track to be fully cashless. It's a complete 180. The exact country that basically pioneered the central bank and paper money is now the one leading the charge to destroy it.
But, Sweden definitely isn't alone in this. Look at China, where the physical wallet is rapidly becoming a total anachronism. Pulling out actual yuan banknotes to buy a coffee these days, it honestly feels completely out of place. While a tourist might be fumbling around with paper currency, locals are just whipping out their smartphones and paying instantly. The smartphone has decisively taken over.
Section 2. Birth of Paper Money. The Evolution of Value.
To really grasp this modern cashless revolution, we kind of have to jump back in time. Back in the 7th century, heavy metal coins were actually a huge constraint on Chinese commerce. I mean, imagine having to cart around heavy metals just to do long-distance trade. To fix that, reputable merchants started issuing certificates of deposit backed by real commodities. Fast forward a bit to the 13th century, and Kublai Khan, Genghis Khan's grandson, issues the world's very first paper currency that wasn't backed by precious metals at all.
Now, what's truly wild about this is how he actually got people to trust unbacked paper. It was decreed as legal tender for all debts, quite literally on pain of death. So, yeah, it's a slightly dark historical reality, but it perfectly shows how fiat currency, money given value purely by government decree, was brutally enforced right at its inception. Thankfully, scratch that, very thankfully, that specific enforcement policy hasn't survived to the modern day.
Section 3. The Rise of CBDCs. Official Digital Money.
So, moving from ancient empires right back to today, those same two nations with deep financial history, China and Sweden, are spearheading a brand new era. We're talking about central bank digital currencies, or CBDCs. Simply put, a CBDC is a digital version of an official currency issued directly by a country's central bank. It's built specifically to either sit right alongside or entirely replace physical cash. This is official, government-issued digital money, and it is absolutely shaking the foundation of traditional finance.
And make no mistake, this is spreading like wildfire globally. While heavyweights like Sweden and China moving towards CBDCs is a huge milestone, they aren't the only players. You've got Ecuador and Uruguay running early experiments, but incredibly, the Bahamas actually beat all the major superpowers to the punch. They rolled out their own CBDC, the sand dollar, nationwide way back in October 2020.
Section 4. The Bitcoin Disruption. A Rogue Technology.
But listen, government-backed digital money? That's really only half the story here. Then you have Bitcoin. Introduced in 2009 by a still anonymous entity, Bitcoin is a decentralized payment system. And what makes it so profoundly disruptive is that it's managed entirely by a computer algorithm. No centralized authority, no bank, no government agency. Its whole structure lets it bypass traditional financial institutions completely. Regardless of where you stand on its actual value, the sheer allure of doing an end run around the traditional banking system right after the global financial crisis, it was a fascinating, game-changing concept.
To truly wrap our heads around the pure mania surrounding what is, at its core, unbacked computer code, just look at the numbers. In 2015, just a few years in, Bitcoin was trading at less than $500. Then, the narrative just absolutely exploded, driven by massive public imagination, tech-savvy millennials, and financiers hunting for the next big thing. The price surged. By December 2017, it hit nearly $20,000 before cooling off and kind of hovering in a lower range for a few years.
And despite some incredibly deep, vocal skepticism from traditional economists who argued this code had no fundamental value, the speculative mania didn't care. It absolutely continued. By March 2021, the price skyrocketed to over $60,000. The momentum was just staggering.
So now we are witnessing this fascinating dual revolution in money. On one side, you have CBDCs, highly structured, centralized, stable, government-issued money. And contrasting sharply against that, on the exact opposite end of the spectrum, is Bitcoin, decentralized, highly volatile, and managed purely by an algorithm. We're watching two totally different philosophies of what digital money should be, playing out at the exact same time.
Section 5. The Fintech Revolution. A broad shift in finance. Which brings us to the really big picture. This dual track is part of a much broader shift that is fundamentally altering how every single one of us interacts with money. This fintech transformation is massive. It affects everyone: households, huge corporations, investors, and central banks. Whether you're paying for groceries in the US or in Kenya, your smartphone is literally becoming your definitive bank. Plus, our sources point out a really crucial takeaway. Even if the wild hype around Bitcoin eventually fades out, its underlying blockchain technology is so ingenious that it's likely going to have incredible staying power and outlast the coin itself.
But, you know, financial innovation isn't exactly new, and it's not always smooth sailing. Our source material reminds us that in the early 2000s, massive financial developments that were supposedly meant to make markets more efficient ultimately triggered a historic crash. So I want to leave you with a critical question to chew on. As the very nature of money shifts right beneath our feet, will this brilliant digital transformation actually empower and democratize finance for all of us? Or does this revolution have a dark side headed straight for that exact same fate? Let that sink in next time you open a payment app on your phone. Thanks for joining me on this explainer, and as always, keep questioning the world around you.